Hello traders, welcome back to the WillssFX YouTube channel. Today I'm going to talk about why and how you should treat your trading journey, your trading account as a business and run it in the sort of business format which you would normally do. A lot of people actually get into trading to have the so-called freedom of actually being able to do whatever you want, whenever you want, trading whenever, by a beach. But if you don't have a plan in your trading, you don't have a plan in your trading business, then all of that can just go out the window. You can start making silly mistakes and you can kind of get complacent with the sort of lifestyle that you're living. First thing I'd say to actually improve your trading is to start journaling and keeping track of your trades. Using a journaling software. The free ones you could use, Google Sheets, Excel spreadsheet. I think pretty much everyone has, Microsoft spreadsheets. But the one I actually use personally, the one I actually pay for, is something called Edgewonk. There is a link in the description if you do want to use it. It's not sponsored, but this is one I actually personally use. And what I actually do is I go onto my MT4, I export my account history, and then you can import it straight into this program. It keeps track of everything, and then you can just obviously add the stuff you want to add. So you can see here in the past week, we've had a 75% win rate. And on the account, you can see we're up just under 8% on the 100k. This is based on my FTMO. As you can see up here, we have got a lot of different databases for all my different Forex accounts. But if you go down to the journal, you can see all the different trade setups. And if you go into these, you can see by importing it, it means you don't have to put all this info in yourself, but you can add personal notes. Did the trade hit the target? Yes or no? Did it hit break even? You can say if your trade management was good, your exit was good, your entry was good. You can kind of keep track of that in here. Then you can have the screenshot of the setup and all these charts to actually go down into this area here. So obviously it would look a bit better if you had more than one chart for each trade, but you have it all in here. Also have a notebook where you can kind of journal your trades for every day in the markets. So I do it on my personal account, not on this FTMO account, because the FTMO account only lasts until you get a withdrawal and then you get a fresh account. So that's why I haven't done the notes in this, but I do actually have the notes in my other Edgewonk database. And the best thing to actually do with this is kind of like a normal journal. So instead of having it separately, because if you're using Google Sheets, then you'd have to have another like Google Docs document or a Word document to actually write down the journal, or you'd have to write it by hand in like a notepad. But with this, everything's in one place. You've got your charts, you've got your trading journal, you've got all your stats, you can do back testing in here, you can have a little notebook, so your actual trading journal. And what I do is I write down what did I find for the day, what mistakes did I make, what did I do well. Then you can kind of look back on this and say, okay, am I still making the same mistakes? If so, you know what to improve on. And if you're not making the same mistakes, then you've clearly learned from your lessons. But yeah, you can do a lot in here, back testing sessions and everything with all the stats. So that's probably the best thing I'd say you should actually start. I think it's only like $160 per year. So it's a very, very good investment to make into your trading. And if you're trading full time, it's not really a big expense for you to actually improve your trading from. You can also use MyFxBook. So if we go onto MyFxBook now, on my profile, these are all public. I've actually made public the challenge, the verification and the funded account. So if you look on the funded account here, you can see the stats that we've actually got. 86% win rate, absolutely beautiful. You've got the trade history and all of this, where you guys can just obviously follow along and see it for yourself if you do want that. But you see you've got the average win, the average loss, and all these stats. You can go in and study all of this, realize, okay, again, same with the Edgewonk, what am I doing wrong, and kind of improve for that. And you can add notes for each trade as well, I'm pretty sure, if you go into your own personal MyFxBook. And obviously this one is actually free in MyFxBook, but you don't get the same features as the Edgewonk. Point number 2, you can write off your Forex losses as so-called business write-offs. I'm not saying a loss counts as a business expense, obviously, because that's obviously quite different. But what I'm saying is, hypothetically, you can count these Forex losses. So let's say you lose 2% in a week. you can count them as business expenses in your mind to say, okay, a normal business, I'll be spending money on ads, research and development, employees, and instead of having to spend it on all that, you're using the losses as lessons to actually improve your trading, to then improve your win rate, your profitability, and overall your trading journey. And all businesses do actually have expenses, so if you actually use this as your sort of expenses as running a trading business, then it does kind of lessen the feeling of, losing money with your trading. And obviously if you're actually learning from your losses and taking them as a lesson, then it can help your Forex journey. And just like any business, you do need to have a trading plan. Trading business, trading plan go hand in hand. Let's say you're running a normal business, you'd have a plan. Okay, I want to spend this much on ads. I want to spend this much on this. I want to do this by this date. And that's the same thing that you should have with your trading. You have to know how much you're willing to lose on each trade. You have to know how much you're willing to lose each week or each month before you actually stop trading to evaluate those losses. Coming back to the ads example, if you're running ads, you'll know, okay, I want to spend this much on ads this week. I want to spend this much in the month. And it's the same with trading. The losses are counting towards these so-called expenses that you can actually have running a normal business. Obviously, overall, you do want to be profitable, but these losses do actually build up, and then you can kind of count them as, the startup costs for your business. I'd say one of the main points is having a strict daily routine. Normal businesses, let's say you're working in an office, you go in at a certain time, you leave at a certain time, and this is business time, this is personal time, and they're completely separate. But if you've actually got them mixed, with this so-called trader lifestyle, trading at the beach, trading, anywhere in the world, you're not really thinking of it as a business. You're kind of thinking, okay, I can just make money whenever, I can just go on my phone, make 10 grand, and it does not work like that in the slightest. What you should do, have a set time to wake up, go to sleep. What hours in the day are you actually looking at the charts? Let's say your strategy is based on London session trading. So in the UK, that's in the morning. But if you're waking up 10, 11 o'clock, well then you've missed the open of London session. You've missed your perfect trading opportunities for your London session trading. And then you'd have to trade New York. Bad thing about this, your strategy is based on London trading. Now you're trading New York, completely different trading. Then there's pretty much no point in having your strategy and your trading plan if you don't have that routine to stick to. It's very, very important in trading the certain times you're actually at the markets. Me personally, I mainly trade, coming into New York session and then throughout New York session. So I know that I don't have to be on the charts at 8 a.m, 9 a.m, 10 a.m. I can obviously look, but I'm not really going to enter any trades at that sort of time because it's not really in my plan. The only time I'd ever trade London session is when I'm doing, the scalps or smaller position size trades. And lastly, protecting your capital is the number one priority. The reason for this is with your trading, you always want to obviously make profit, but the number one rule is to protect your capital. I'd say trading with the prop firms is actually a good way to go about this because they always want to have you in profit. If you take the challenge and you end in profit, you get a free retry. And that's because you've protected the capital. Although you haven't reached the profit target, you're still in profit. You've protected that original capital. You haven't gone down from the original before actually finishing the challenge. And with trading, you obviously want to make as little losses as possible. And it's inevitable you're going to make losses because it's trading. But if you've got good risk to reward, then you should be able to protect that original capital. A lot of people actually fail with the challenges. So let's say they get a little bit of drawdown. They're below the original account balance. Let's say a 100k account, they're down to 97k. Well, they're in that drawdown. They've gone down from 6 figures to 5 figures, and that can affect their psychology. But once you're above that 100,000, you've kind of got that buffer in the account. So if you take a couple of losses, doesn't matter, you're still above the original balance. This is why I suggest to some people, if you're withdrawing from your FTMO, maybe leave 1 or 2% in there just for that sort of buffer. So next time you come into the markets to trade, you kind of have that buffer before you go into that drawdown period. And obviously, let's say you make profit again, where you could just withdraw it anyway, because again, that profit is yours in the account. You can just choose to withdraw it or not. And a lot of people actually start over risking. So let's say they get in a bit of drawdown, they start over risking to make back those losses. Worst thing to do in your trading. It's okay to do it maybe. I say the only time it is okay to do it is if you're risking your profits you've already made. So let's say you're risking 1% and you've made 10%, so the account is up by 10% on the original balance. Then you can maybe start risking 2%. I'm not saying this is a good thing to do. I personally never actually do this. I stick to my risk parameters. But let's just say, for an example, you started risking more then. Well, it doesn't matter. If you lose 5 trades, you're back at break even. But obviously you should keep this risk amount the same for any amount in the account, because it just will help your psychology, help sticking with the trading plan, which you should always do. Stick to that trading plan. Maybe have it on, because I've got the 2 screens here. I usually have the charts on one and my journal software and the trading plan on the left screen. So you can kind of always looking at that. Maybe have it as a sticky note on the bottom of your monitors, sticky note next to your laptop, a little notepad with your trading plan. It's easily accessible. What I actually personally do is I have a little notepad that says the lot sizes to use for each stop loss size. So I know on gold, if I use 30 pip stop, it's 3.33 lots. If I use a 20 pip stop, it's 5 lots. So I kind of know this, the 2 stop loss sizes I usually use. Instead of having to go, into the Stinu risk calculator app and doing all the calculations, sometimes you can miss your entry and it's not really ideal. You can miss out on a couple % risk to reward just from missing your entry. But yeah, hope you guys did enjoy this quick video on how you should treat your trading as a business. The Edgewonk software in the description, along with my mentorship group and all my social media links. So I'll catch you guys in the next video.